It's so interesting because I think in aggregate, we see a lot of the most established firms raising funds with some regularity. This is the 18th fund at some scale. So it's an early stage fund, $1.5 billion. What do we infer from that?
Well, Ed, thanks for having us on the show. And as you mentioned, we just launched our 18th fund. It's $1.5 billion dedicated to early stage AI entrepreneurs. Greylock over the last 6 decades has been partnering with entrepreneurs when companies get started, companies like Airbnb, Facebook, Palo Alto Networks. And we're excited with this new fund to back a new generation of AI entrepreneurs. And as you know, we've partnered with many of the early AI leaders dating back many years before AI was obvious. So we rewind the clock to 2019. We backed Base 10. Base 10 today is the leader in AI inference with serving some of the leading application companies like Cursor, Abridge, and others. We backed Crest AI, one of the leaders in customer service AI. If you call United or Marriott today, you're talking to a Crest AI agent. And of course, we're partners with companies like Anthropic and OpenAI, powering the foundation model layer that's driving this whole economy. But at the same time, I think one of the benefits of our history is we've seen many of these technology waves. And when we think about the AI wave and you connect it back to, let's say, the mobile wave, we're in the equivalent of 2008 or 2009. We're 1 to 2 years after the iPhone moment. And I think we're going to look forward, and many of the defining AI companies of this generation have yet to get started. And this new fund is all about finding those entrepreneurs and helping them build those companies.
And I think it's interesting what those entrepreneurs are doing and what kind of companies that they're forming. You, as an example, so you're investors in OpenAI and Anthropic. You got into Anthropic at Series F and the later rounds. Those are the leading frontier labs. With this new 18th fund, you are not necessarily going after the model layer. What is it you're focused on?
We think of it as 3 layers, and we will continue to invest in all 3. So there's the model layer, and as you mentioned, we're investors in both Anthropic and OpenAI. We're seeing new companies get built around new data domains or new approaches, and we continue to look for and will back new companies at that layer. There's a very big opportunity in infrastructure. The entire stack's going to get rewritten around agents. Today, we have companies like Base 10 in inference, Brain Trust in observability, Snorkel in data. But we believe we're going to see a whole new agent cloud get created. And just like we saw happen with the rise of the cloud and the hyperscalers and companies like Datadog and MongoDB and Snowflake, we're going to see similar purpose-built services for these new workloads. And that's an amazing opportunity for entrepreneurs. And then, of course, on top of that are applications. And within applications, we already have companies like Crest on customer service or Abnormal in cybersecurity, but we're going to see a proliferation of application companies, especially now that agents actually work. We're 6 months into the models that can power long-running agents, and we're seeing amazing results. For example, we're investors in a company called Resolve AI. They build agentic on-call engineers. In the last 6 months, at companies like Coinbase, DoorDash, Fireworks, engineers don't have to wake up in the middle of the night when there's an incident because the Resolve agent can autonomously handle that incident. That's an example of agentic AI having huge impact, and we're just getting started in that era of technology.
We need to talk about Moonshot and Kimi K3. The public markets is where you see the drama.
Yes.
But what is your interpretation of that, and why a $20 billion startup from China topping a benchmark and people looking at their economics has caused this reaction?
Well, I'd start by saying it was an amazing release yesterday. Largest open weights model to ever be released, 2.8 trillion parameters. As you said, really strong initial results. And they also showed a lot of interesting techniques from an efficiency perspective and how they built that model that's really impressive. And I think it's great that models like that, models like the one that came out from Thinking Machines the day prior, continue to give vibrancy to the open source ecosystem, which is an important part of our overall AI economy. At the same time, I think the reaction over the last 24 hours is perhaps a little bit premature. And I would say, a couple of points. It reminds me a little bit of when the DeepSeek moment happened last year. And when you look at this new Kimi model, there's maybe a few things, the audience should consider. The first is benchmarks are imperfect, right? It's, you can take a model and make it very, very strong at a particular set of benchmarks. I don't think it's until that model's had time to percolate in the real world that we can get a true sense for the trade-offs that the model's incurred and what its real world performance performance looks like. The second is this whole discussion around cost. I think the discussion misses the point. It's very focused on token cost.
Yes.
But we think about things more in terms of task cost. Not every token is equal. And so I'd make 2 points as it relates to the cost profile of Kimi. The first that's actually interesting is Kimi K3 is much more expensive on a per token basis than Kimi K2, which is sort of contra to the narrative.
And we do not know what it costs to train Kimi K3. We have an idea on K2. I just want to put that out there.
Absolutely. That's absolutely correct. So the per token cost is more, but even more importantly, it's not particularly token efficient. And so what that means is for a given task, it actually uses many more tokens than an OpenAI or Anthropic model. And you're seeing that already in the early cost benchmarking. And so I think this conclusion that it's going to lead to price erosion for the frontier is perhaps a bit premature.
In this case, the frontier, let's say it's Anthropic and OpenAI, right? Some people are making the argument, well, hold on a minute. If a $20 billion valuation Chinese startup, we don't know the training cost, but they're basically saying $3 per million tokens on the input side, $15 per million tokens on the output side. If they can do that, why are we valuing Anthropic at nearly $1 trillion? Like, what's the moat that Anthropic has?
I think both Anthropic and OpenAI have multiple moats. The first is they have very significant revenues. These are the fastest growing companies in human history. And those revenues are not just on the back of their models and their amazing API businesses, but their first party products, right? And I think relative to the last time I was on the show, you look at the success that Anthropic has had with Claude Code, Claude Cowork, most recently Claude Tag. It and OpenAI are full stack AI companies.
Can I just say one thing? I think for 2 years, and it's been too long since you've been on the show, but we've basically assumed the best model wins. Is it as simple as that? You seem to be saying it's not.
Well, it depends on how you define the best model, right?
Yes.
And I think I'd be careful to jump to the conclusion that Kimi is now competitive with the best. Certainly on some of the benchmarks that they release, it's competitive with, I'd say, one generation prior. Yeah. And of course, we don't know what's coming out from Anthropic and OpenAI in the coming weeks and coming months, but it's been rumored and reported that there's significant new releases coming out from those models. So we have a particular checkpoint in time that we're comparing it to. I think we're going to see a lot of really exciting releases in the coming months. But maybe, Ed, if I can, I want to make one broader point, which is if you just think about the overall size of the token economy and where we're going, right? In 2023, OpenAI's API was processing per day about 30 million tokens. In March of 2026, they announced they were doing 15 billion. So just in less than 3 years, a growth of 50 times. I think when we are talking in 2030, the overall token economy will be 2 orders of magnitude larger than it is today. And so there's going to be plenty of opportunity for the best leading closed frontier models to grow, for the open source economy to grow, and for the application layer to grow. I think the only mistake one can make is underestimating the size of this overall wave.